Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Prerana Seth, Fixed Income Strategist. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. We continue with our 2024 Outlook series, and today we briefly discuss our currency outlook. 2023 ended on a negative note for the US dollar as combination of negative US growth surprises, a dovish Fed acknowledgement and positive risk sentiment led to a sharp reversal in the US dollar in the final quarter of 2023. So how do we expect the US dollar to perform in 2024? Well, we continue to believe that all three factors, growth differential, interest rate differential and risk sentiment, will influence the movement of the US dollar. But overall, we believe that the case for US dollar weakness remains in 2024 despite the strong start that we've seen so far this year. So starting with the interest rate factor, with the Fed likely to begin its easing cycle sometime in 2024, it is clear that the Fed policy-driven US dollar strength is unlikely to play, and we are likely to witness a weaker US dollar bias. In case of US growth exceptionalism, we believe it is likely to remain strong in the near term but start to fade in the second half. According to the IMF estimates, US is likely to witness a growth slowdown compared to other developed market peers, and this should lead to a normalization of US growth differential with peers weighing on the US dollar. And the final factor, risk sentiment, could again play an important role in driving the US dollar moves. A risk-on environment will ultimately depend on various factors, but should gather steam particularly when the Fed starts to reduce rates and the economy is able to avoid a hard landing. A risk-on period, on the other hand, will be negative for the US dollar. Having said that, risks remain in the form of upcoming US elections as well and the possible escalation of geopolitical tensions. Hence, like 2023, we could witness periods of risk-off which could support the US dollar and even limit the US dollar weakness. Lastly, a bull steepening of the US Treasury yield curve should also mean underperformance of the US dollar. Having said that, we downgrade our outlook on the US dollar from positive to neutral for the first quarter of 2024. While the above-mentioned factors should ultimately play out sometime in 2024, the first quarter of the year could still witness the US dollar to move in a tight range until there is clarity on 1. The developed market central bank's race to rate cuts, and if the Fed could lead it, and 2. US growth outperformance fading. Elsewhere, we hold a less negative view on the euro in 2024 but remain neutral on the currency in the first quarter of 2024. In case of the GBP, we maintain our negative outlook for the first quarter of 2024 and look to upgrade our outlook in the second half when we expect the risk sentiment to improve. And finally, on the Japanese yen, we maintain our negative outlook given more unwinding of aggressive Fed rate cuts and the likelihood of no hawkish Bank of Japan action until the second quarter of 2024. As always, thank you so much for listening to our podcast, and we hope you find it useful. If you do, please share it with your family, friends and colleagues. For more information, please reach out to your contact at ADCB. You can also log into our website www.adcbam.com. This is Prerana Seth signing off.